On this point of evolution when it comes to bank regulation, what can Dealmakers expect to see over the next year or two on that front?
Right. I think that long-term thinking and long-term planning in this climate is very, very difficult. A lot of deal makers in this climate have become very defensive, protecting themselves. If there's some opportunity that is just the opportunity of a lifetime, maybe you take advantage of it. But I think a lot of people think short-term and protective, and make sure, stabilize their business and make sure that they're going to be around when things do stabilize.
Another issue when it comes to the big banks, this concept of too big to fail. Do you think the big banks should be broken up?
Complex question, because the real question is, how do you equate size with risk? I don't think you could necessarily say a $2 trillion bank is twice as risky as a $1 trillion bank. Maybe, maybe not, depending on the risk profile. So I think size is itself a risk factor once a bank is above a certain size. And so I think when we look at too big to fail and downsize in the size of the banks, we also ought to think about the risk profile of the particular industry as well.
Given that finance is a global industry versus something like regulatory, which is more dealt with on a national scope, what can be done to kind of work with that tension?
Asia and Europe and the United States all have significant economic issues and regulatory issues, but they're all different. And so I think until there's some stability in the system, all the international banks are going to have to deal with both the particular issues in their home country as well as all the global issues. And to me, that all leads to kind of a tightening of the belt, reduction of leverage, raising more capital, reducing the risk profile, and really just trying to hunker down and to survive and better position yourself.
So start local, get global.
Yeah, and pay attention to both markets. Pay attention to the local market. Some of our banks have significant operations. In fact, make a huge amount of their overall annual income outside the United States. That all has to be protected. On the other hand, if you're in too many markets with too many different products, I think diversification is a good thing. But like many good things, you can be too diverse or too diversified. So I think there's going to have to be some attention paid to a reduction in both global scope and a reduction in the various types of products, different products that banks offer.